$279 billion wipeout. Nvidia stock has already had two legs lower. Is it headed for a third? Well, the stock has had a $279 billion decline, and it's down by 17% in the last week. Simply put, this is the biggest single day wipeout ever. $279 billion. The runner-up is Meta back in 2022 with 251. Then it's Nvidia, and Amazon. Nvidia seems pretty popular for declines. So what's the reason for the decline? Well, it's the DOJ, or Department of Justice, with a subpoena. So they're seeking evidence on antitrust law violation. They have concerns Nvidia has enforced exclusive use of its AI chips, and regulators investigating their acquisition of Run AI. Okay, cool. Well, stocks are down again. Yes. But here's what's interesting. Nvidia actually had more declines in the afternoon or the last 4 hours of trading. So here's something else that's really interesting. Nvidia's Jensen Huang just crashed out of the $100 billion club. Bite your tongue there, Jensen. Oh my goodness. After his net worth plunged by more than $10 billion. He seemed pretty interested and surprised on the last interview with Bloomberg when he was like, I thought I told the market what was happening. I think it might have been the leather jacket. He should have really stuck to those leather jackets and not try something different, because ever since then, oh boy, it's been a rough ride. So Jensen's definitely getting a bit hurt here, but not everything is equal. Despite today's drop, meaning yesterday, stock rally leaves this year has minted more millionaires. How many? For Fidelity, it's 497,000 accounts have now reached $1 million as of the second quarter. Thank you, Jensen. And here's another interesting stat. The yield curve in the 210s, this is the thing people look at to know whether we're going to get a recession, usually when it uninverts. Right now, it's at 1.000. The low is 0.999. Hey, if this uninverts, that's bad. And we got some news from the Fed today. Fed's beige book shows stagnant, declining U.S. economic activity. Cool. So what does this mean? It means things don't really look all that good right now. There's a headline I'm trying to look for here, Bostic. Let me just see if I can find it really fast, because he was talking today after we heard from Mester, and he basically said this. Let me see if I can pull it up here. There you go. It's time to cut, boys. Why? I think they're realizing they're a little bit late to the party. Atlanta Fed President Bostic says officials can't wait for inflation to hit 2%. No shit. Pardon my French. Man, what are these guys waiting for? Looking at fear and greed, we got a major knockdown today, because yesterday we were looking at price breadth, which went extreme greed, but now put and call ratio is going to fear, and market volatility is now at neutral. So market's getting a little bit whippy, or there's volatility. Another way of thinking about this is that today we had the Bank of Canada cut for a third time, right? They've already cut 3 times now. So yeah. No shit there, Sherlock. Yeah, you guys can't wait till we get the 2% to finally cut rates. So now it's a matter of whether we're going to get a positive reaction or a negative reaction. Bank of Canada cuts to 4.25, eyes more easing ahead. He repeats, more cuts likely if inflation keeps easing. Yeah, that's what's supposed to happen. So it's going to be very important what happens for the U.S. on Friday. We've talked about this before, but U.S. jobs data will help the Fed gauge the extent of its moderation needed. Yes. And what do we have coming out tomorrow? Arguably, this could even be more important than the government's numbers. Why? Well, the government's numbers have been overstated for the last, it was 860,000 jobs or something. So maybe ADP is actually more accurate. Maybe this is the one we should look for. By the way, it comes out pre-market tomorrow at 8:15. Then we got ISM numbers coming out at 10 o'clock. And then after that, we've got average hourly earnings, non-farm payroll, and unemployment all coming out pre-market on Friday. And remember, we have a simple 2-step recipe we're looking for here. This is the strategy I went over in yesterday's video. It's for September and October, following what Tom Lee said. And it wasn't just based on what Tom Lee said. I already had this plan. I just decided to share it with you because, frankly, I thought people needed a little bit of help. So if you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly, greatly appreciate that. So here's scenario number 1 as a reminder. We go to new all-time highs. We get a back test. We buy the back test. Cool. Option number 2, we lose 550 and we go back down to like 510. Where did the market close today? It's right back here at 550. Yes. So I'm going to give you an update on the strategy in 1 second here. There's just one more thing I want to go through first here. So what I really just want to remind people of is that if you were crying dragon tears down over here because you're like, oh my God, if stocks can just go back to where we were, look Look how much progress we've made. So if you're a scaredy pants over here, you should probably be trimming even here. Yes, that's what I'm saying. You should even be trimming right here. I'm not a financial advisor. Please read the description for full disclosure details. But this is what I would be doing. As we were down here, I'm like, I wish I would have trimmed a bit more. So what did I do? Man, I trimmed. I trimmed on the Monday. So I trimmed. I think I trimmed right here. Trimmed on Monday, and I also trimmed on Friday. So I didn't trim a lot. I trimmed like roughly 15 to 20% of my account. I redeployed a little bit into better ideas. And actually, I cut Nvidia on Friday. Not because I thought anything's terrible with the company. I just think the trade's a little bit tired. When I look at what happened here, I'm like, okay, well, look at the exhaustive move, and then it sold off. So what was the high of the day? It's 113. This stock has been doing mathematical good work for us. What's also really important here is that after our 2 consecutive daily candle closes below the 50 MA, what happened? Boop, it went down. And it's not even on heavy volume. That was a big move for Nvidia, but it's not based on volume. Like, woof, that doesn't look good. No. So if now we're looking at what we see here, well, I see a shoulder, I see a head, I see a shoulder. The challenge is that this pattern is supposed to be symmetrical for optimal results. If we look here, the size of this box is dramatically bigger than this box, which means our shoulder is way off where we're looking on the left-hand side versus the right-hand side. So what am I telling you? I'm telling you the chart doesn't look great. It didn't take very long for us to curl all the way back down to here. On the weekly chart, this is a no-go zone until we have hollow candles. And on the monthly, we still have an inside bar. We're basically here at 102. That's the inverse head and shoulders neckline I just showed you. Now let's give an update to the strategy here. Because scenario 1 means that, again, I trimmed on Monday, the 26th, and then on Friday, I exited positions on Friday, losers and winners, buying the backtest of S&P 560. Okay, what would that mean? Probably at least October. Why? Well, we got to make the new high, then we got to hold it, then we got to backtest it. That's probably going to be minimum of October. I don't want to see it happen intra-month here on this candle. So for me to get back to fully invested over 95%, that's what I'll have to see. That's option number 1. Option number 2, we buy on the monthly higher low. Where is that? That's a lot lower than where we are now. That's at 510. And it's only September 4th. So what does it mean? Hey, we're fighting the clock right now. We don't want to buy too early if we're going to be scared if we go back down to 510. All right, had to take a quick little break there. Coughing session. All right, anyways, let's look at 2 things because this is all that really matters as we're going into tomorrow. Right now for QQQ, we note a little bit of a downtrend. We talked about the Bitcoin pattern yesterday. Here's what's important to me. Look at the high of the day today. The high of the day today is 464.45. Our gap fill, 465.11, which means we got close to filling the gap. Boop, it sold off. We didn't even make it there, let alone back to last week's low. Nope, that was no cigar. Now let's look to the S&P because this is the most important number that I laid out this weekend going into this week. It's 555.04. Look how close we got here today, 554.4. It's also a rejection. The reason why this really matters is because, look, we're resting right here on the 50 DMA. We're going to get a preview for the number on Friday tomorrow with ADP non-farm payroll. And I just showed you what happened to Nvidia after the stock closed 2 days below the 50 DMA. It was not good. No. So if now we know, like we're looking here on SPY, that by losing 550, it opens up the possibility of slamming down to as low as 510. Might take a pit stop here at 525 for the weekly chart. And what I'm looking for confirmation is going to be a loss of the 50 DMA. We only have to slide just over $1 now, $2. So with that said, thank you very much for tuning in. Maybe you want to come hang out with me at 9:15 a.m. tomorrow. Thanks so much.